What's good, YouTube? It's your boy Zay, and welcome back to another Setup Sunday. Today is June 6th of 2021. That's right, we are halfway through the year, and a lot has happened so far. So let's just acknowledge that last week was a really good week. We finished close to all-time highs. We had the S&P close at 42.29. And so this week is really looking like this could be the week where we finally get that breakout that we have been kind of sitting around and waiting for the past couple of weeks. We also had the jobs report come out, and it was under expectations, which was a good thing for the market. So right now, the way things are moving, it is shaping up to be another bullish week. However, we are going to jump into the article to talk about things we should be paying attention to, and we're also going to get into those technical levels. So if you like this video, do not forget to press that like button as well as subscribe to the channel, so every week I drop a video, you are in the know. Now, with that being said, let's go ahead and kick it off. All right, family, you guys know we're going to start with the article of the week. And again, the link can be found in the description of the video. So the title of this week's is AMC and meme stocks could spark more heat in the week ahead as investors await inflation news. So basically, they're telling y'all, hey, look, these meme stocks could have another week of a run. So now I'm not advising nobody to play these meme stocks, but hey, get your money how you live. I ain't saying nothing. You know, long as you manage your risks, it's on you. But hey, we could see another wild week. That's basically what they kind of telling us, brace for another wild week. Now, when I did go through this article, there were a couple of things that stuck out to me. And I mentioned it early in the intro, which is inflation data is going to be really big. We talked about it last week. So I'm just going to skip down and show you guys, look, inflation data is the highlight of the week, as we basically are waiting until that FOMC meeting that I talked about on June 15th and the 16th. Now, last week, I covered it. I said, hey, June 10th is when the May's Consumer Price Index comes out. That is Thursday. Now, the big anticipation is that they think that it's going to show hotter numbers again. Now, here's where I think they're fooling people, because if you pay attention to what's been happening with commodity prices, things such as lumber and a few others, they've actually pulled back. So my personal anticipation is that it's not going to come in as hot as many people think, and that could cause the market to kind of go into rally mode even further, because it would just give more ammo to the Fed to say, hey, this is why we're not thinking about tapering bond purchases just yet, because we've had 2 months in a row where jobs have come in weaker than expected. And if inflation is transitory, as the Fed has been saying, and then we start to see, hey, that inflation has peaked and is coming down, then essentially the Fed was right. And all these economists who have been betting against the Fed are wrong. And again, like I said, that could spark a potential rally in the market. Now, in this article, the thing that I wanted to point out is, let me get to it, guys, where we at right here. So watching for inflation signs. So essentially what they talked about is this. So they are expecting that the CPI to be up 4.7% year after year. So the big thing is that we don't want to see this number come in higher than 4.7 when they talk about for May. Same thing for core inflation is expected to be up 0.4%. So if we come in line or under this will show that, hey, inflation might be peaking. As you can see, the guy's mentioning, hey, he's getting a little nervous. He sees signs of a top, so he's raising cash, blah, 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 blah. And here was the big thing that I picked out, was that he said, hey, there could be anything that could spark a sell-off or a pullback, right? He's been saying that, hey, if we get any hawkish comments from the Fed, meaning, hey, they're talking about tapering bond purchases, or they're thinking about pulling back from cash in the system, then, hey, that could be setting up for a 7 to 10% pullback in the market. Now, this is the point where they basically give us like where their expectations are, right? So the next CPI is the next point of focus ahead of the Fed's June 15th and 16th meeting. The question is, will it be so hot that a central bank may have to reassess its point about temporary inflation, or could it show prices are peaking? Boom, we talked about it. Yes, inflation is everywhere, but it could be peaking, right? So they start getting into the taper talk, because ultimately that's what is probably going to lead to the next correction, right? As soon as the Fed starts saying, hey, we're talking about tapering, you might as well get ready for it. Now, they have been setting this up for August for the longest. Now, if you look at the article, they say, hey, the market has been expecting the Fed to begin talking about unwinding bond later this year, with most of them targeting the Fed's Jackson Hole, Wyoming symposium, which is at the end of August, right? The end of August, meaning early September. We know that September quiet witching is the third week of September. So they're kind of lining this up, right? They're setting it up. This is when the Fed is expected to first start talking about cutting back its purchases, right? Then they're actually going to start reducing. So that's the issue, is that they're going to set it up like, hey, it's going to happen immediately. But no, they're just going to start talking about it. Then they have to like put a plan in place to start taking action. And then after they start tapering, then they're going to start looking at interest rate hikes. So that's not expected until 2023. So at the end of the day, they are essentially setting the market up for, hey, a 10% correction in September. Then they'll say, hey, we knew this was coming. So the market will rally. And then once they start talking about actually doing it and interest rate hikes, that's going to set up for the next correction. So they're just building all this stuff in and setting everything up. This is why we talk about manipulation and all that other good stuff. As far as the week ahead, we kind of pretty much already talked about what to look for. The biggest thing is on Thursday, the CPI numbers. Friday, we have consumer sentiment. So that is the article of the week, guys. That's what you want to pay attention to, or those will be the big things that will kind of drive the market for the week. So with that being said, let's get into our charts to see how that actually translates. All right, guys. So we are going to kick it off with the Nasdaq, as we usually do. So I like to look at it from a weekly perspective. So when you look at the Nasdaq for the week, we only gained 0.5%, but that doesn't really highlight the intra-week movement that we actually saw. So let's actually drill down and talk about what we saw last week and where we expect to go this week. So just from a weekly perspective, though, you can see that we had, again, the double rejection here. We had this up week last week. Had a little bit of a pull back down to our 13,565 level, but we end up pushing up Thursday and Friday, especially Friday, back to our 13,800 level. So my expectations for the week is that, like I said, this could be the week that sparks a rally. So what I would be looking for is to get through this 13,865 and really try to make a push for 14,000. So you can see I have 14,044. And if we get through 14,044, we could be pushing on the Nasdaq for new all-time highs. And I'm actually going to bring this down. I don't want to get too overzealous. So let's just say we try to make a push for new all-time highs. That will put us at about 14.2. Now, let's break this down on a daily chart, just so you can see it a little bit more clear, right? So as you can see on Tuesday, right here, January 1st, January 1st, or June 1st, I'm sorry, June. We had a red day. And as you can see, the first 3 days, we just pulled back. And then, of course, we had this huge bounce and a bit of a gap up on Friday. And we finished the week pretty much flat. That's what happened. So what I am seeing here is this is like a sign of a doji. And now that we have this bounce, this could be the start of a reversal, right? So if this is the first green candle of the three white soldiers, meaning 3 green candles in a row, what that leads me to see would be a jump on Monday, which would be the 7th, where we possibly could, if we gap up, say, and we open above 13,865, then we could realistically push to about this 14,000. Excuse me. So we can push to about 14,000. Now, that's going to be a heck of a push, but we could see it. And if that's the case, then Tuesday we could get another push here. And then ultimately, I think that's where the market will say, okay, we need to kind of calm down, because they know June 10th, and actually, let me move my vertical line here. That's when the CPI numbers come out. So there's going to be some anticipation about those numbers. We could, the market could either trade flat or start to slow down. And so that's kind of the expectations that I'm going into with the week for. So, that's what I'll be looking out for. As far as downside numbers, let's just say we don't get the push to the upside that we think we'll have. Again, downside that we need to be watching for is, of course, this 13,700, because there is a slight gap up in there. We do have our 50-day exponential moving average here at the 13,581 or so. And more than likely, if we break down past these levels, you see we have 13,460 where we would hope to kind of get some support. But if not, more than likely, we're going to be coming down to fill this gap, which is right at 13,295, basically 13.3. So in summary, upside numbers, 13,865 to 14,000. Above 14,000, we could possibly see 14.1 to 14.2. Downside numbers, again, we need to hold the 13,700. If that falls or breaks, we could be coming down to this 13,565 or so. And anything below that means we're probably breaking down and rolling over. And I would expect to see downside down to about 13.3. And so that is the Nasdaq for this upcoming week. So with that being said, let's get into the triple Qs. So the triple Qs, looking at it from, this is a daily, let's get to our weekly chart. So as you can see, guys, for the week, the triple Qs, 0.5% as far as what it gained. And you can see that we opened the week here, we pushed down, and then at the end of the week, we pushed back up. So we basically have a huge rejection, come back, fill in orders, all that good stuff. And as you can see, we're starting to build up. So again, what I am anticipating on the triple Qs is that now that we close at this 335, it does validate the next two levels that we had, which is 338, all the way as high as 342. Those are the upside numbers for the week that I'll be looking for in the triple Qs. As far as downside numbers, again, 334, 332, all the way down to 330. If 330 ultimately gives way, we could be looking to come down to about 324, 325. So if you look at that from a daily perspective, you can see here how on Monday we had a pretty red day, and then Wednesday and Thursday we pulled back, and then ultimately Friday we got a huge bounce. So again, if this is what I expected, which is a pullback to set up for a larger run, then the next two candles should be green candles. That's just what I would be expecting. So to finish off the three white soldiers, right? So with that being said, again, I'll be looking for a finish on Monday around 338. And if we could do that Tuesday, I'll be looking for a push to about 342, ultimately before we start to taper off and kind of slow down as we go into the June 10th CPI numbers, as well as that next week's June 15th and 16th number. So there's a lot that's going to kind of be riding on those. So if you don't want to trade an environment, you can just wait till that stuff, pans out and then enter the market after. Or, if you're a little bit risky, you can try to, make some assumptions and see how it goes. So just to recap, right? So just for triple Qs, upside numbers, 338, 342. Downside, we want to see the this 332.56 hold, and it could be a little bit lower right here. So 331, 332, excuse me. And then you have 330, ultimately where our 50-day exponential moving average is. And if we crack below that, then again, we're probably looking to come fill this gap. So you want to pay attention to about 324 down to 322 on the triple Qs. Now, I do think we have bullish momentum, so I'm leaning to the bull side. However, you can never be too cautious. Now let's get into the SPX. So looking at the SPX, this is a daily chart. Let's go and switch it to the weekly really quick. Again, as you can see, we opened the week at 42.15, 42.18. We had a pullback all the way down to about 41.65. And then from there, the market recovered and we pushed back up to 42.29. So let's look at it from a daily perspective, right? So when we look at it from a daily perspective, the same scenario. Monday, we started off with a down day. Then Wednesday and Thursday, we had two indecisions, even though we came down. And then ultimately Friday, we had a big bounce. Now, I want to show you guys a similar pattern that I have seen on the SPX. This is May 6th and May 7th. This was a Thursday and a Friday. Now, this was after we had that giant rally in April, and then we consolidated pretty much the end of April into early May. And the reason why I say this setup looks very familiar is because on Thursday and Friday, it looked like we were ready to break out, but we had a false breakout. And then early in May, we had that massive pullback, that 4% pullback, right? Now, the reason why I say it looks very similar is because we had a pullback, we had a bounce, then we came down and retest, and now we're starting to get that rally, and now we are ultimately consolidating again. This was a Thursday, and this is a Friday. Now, the reason I feel like this is ultimately a breakout is because if I change this to a line graph, you can see consolidation. Looks like it was a breakout. It was a false breakout, and we pulled back. Same situation. We came through consolidation, pullback, and now we're at that point of decision again. Do we continue to go up, or does it lead to another breakdown? Ultimately, with the way things are looking and leading up, again, I do think we have enough to break out. So what are the levels that we should be paying attention to on the SPX going into next week? So when I look at it from a weekly perspective, let me give you some levels, right? So if we break out past this 42.32, and what I'm going to do is I'm going to throw my fib on here just so you can see. Ultimately, the next level that we would be looking for is 42.80, 42.80 to the upside. That's where we would want to finish the week at. Now, let's go look at this from a daily perspective, and you can see how this has been playing out, right? So I want to go drag this to June 10th because that's when the CPI numbers come out. Now, this is what gives me the indication that, hey, it is possible that if we break out on Monday, we could aim for 42.50 first. That would be 42.50 first. And if we can get through 42.50, then we could probably aim for the 42.80. So I do want to throw an intermediate level in there at 42.50 because that's going to be where a pit stop happens. And then we can try to aim for the 42.80. So let me remove this so you can see a little bit clearer. Now, to the downside, I want to get rid of that. So let's say we get rejection. Then if we get rejection, you pretty much want to follow the same pattern of rejection. So we'll probably come down. We need to make sure 42.13 holds because that's where we have some consolidation. If 42.13 does not hold, then more than likely we'll be coming back down to about this 40, what's that, 41.90? Yeah, 41.89, 41.85. If that does not hold, I'm going to be raising these levels, and that 41.60 would be the next. If 41.60 gives way, then we're coming down to close that gap, which is right at our 50-day exponential moving average, which is right around 411.15. So that is what I will be paying attention to on the SPX. So let's get into the SPY now. So looking at the SPY, that moves very similar to the SPX. You guys should already know that by now if you've been tracking. So when we look at the SPY, from a weekly perspective, look at what we have here. We had the double rejection. We had a little bit of a green candle here for some push up. Then we had a retest all the way down to 416. We had buyer's rejection come in and push us all the way back up to 42.60, which is pretty close to all-time high for the SPY. So this right here is really shaping up to look like, hey, we are ready to make a move to the upside. So if news comes out really good, then again, the first level I'll be paying attention to on the SPY is for it to get through 40. Let me go back down to a daily so I can show you guys a cleaner. There we go. So what I'll be looking for is for it to get to at least 424 first. So we could probably gap up Monday. And if we gap up into 423, 424, I definitely think it makes a push to about 425. So let me just adjust that a little bit. 425 is the first level. If we get a close at 425, that could really be pushing us to about 427 to 430. 427 to 430 next week. Now, we may not hold that, but we could probably get there. So that's what I'll be looking for as far as upside numbers, right? So downside numbers, we will be looking to make sure where we at? Yeah, 421.85 would be a level of actually 420, like 421, 420. Will be a level of support. If that does not hold, then of course 419. And if we break down from 419, we'll be coming down to about 416. Don't forget, we do have this gap here that eventually does have to close at this 411, 410, which is right around our 50-day exponential moving average. So, just make sure you guys are protecting yourself. If, the rally could get going and it could be looking nice. But then again, do not forget that we have those events upcoming, and those could be used as a rug pull type of thing. So you want to make sure you are in position to protect yourself. So that's the SPY for next week as far as levels that I'm looking for. Like I said, to the upside will be 423. Then we can get to 425. From 425, looking to get to 430. That does not happen. Looking for support around 420. ish, give or take, down to about 419 all the way to 416 is what I would be looking for on the SPY. So with that being said, let's get into the DIA, or the Dow Jones Index. So looking at the DIA, this thing has just been chugging along, chugging along, chugging along. So where do we expect the Dow Jones to go? So for the Dow Jones, here is a little bit of a story, because as you can see, we actually have a red hammer pin bar. Now, we did close above this candle, or right on this line. So that could signal us to aim for 350 again. Ultimately, I do think the Dow, or the DIA, could aim for 350, because when you consider what's in the Dow Jones, you do have a few tech companies. So if Apple gets going, Amazon's not in the Dow Jones, so I'm sorry. But if Apple and similar companies like that get going, could be enough to push the Dow Jones to 350. If we get to 350, then again, 355, 356 would be the next target. If we don't, and if we get to 350 and we break down, then I'll be looking for a similar movement here. So that would give me levels of about 344 all the way down to about this 341, as low as 337, 336. So let's just break that down on a day chart so you can see that a little bit better. So again, this is starting to look like very similar to that, to the same movement here, but we broke up, but we came down and had that pullback. So more than likely we will push to 350. And what we need to see is more follow through. If we get more follow through, then that means we'll head into 356. But if we break down at 350, then again, we can see it pull back down. And that's why we have those levels of 345 all the way down to 341. Even back down to where our 50-day moving average is, which puts us at about 337, 338. So those are the levels that I will be paying attention to on the Dow Jones, and something that you could be watching as well. So let's speed this up a little bit. We're going to go into the US 10-year Treasury. So looking at the US 10-year, as you all know, when this drops, that's a good thing for tech. It allows tech to rally. So as you can see, it's been on a downtrend / consolidating. I do think this is the week where ultimately we can see a breakdown and come down to that support of about 1.48. As you can see, the RSI has divergence. We're losing momentum on a TTM squeeze. And so therefore, the US 10-year Treasury could be looking to come down to about 1.48. If I break it down on a day chart, you can see this is a very, very bearish candle and could be the start of 3 black crows, which are 3 red candles in a row. So we would get maybe one more, kind of like a doji. And then on Tuesday, we get that ultimate touch at the 1.48. But as you can see, this is solid support. The last time it got here, it immediately pushed back up. So what we need to see is an actual close at 1.48, not just a touch and bounce back up, but we want to see a close. And if we can get a close here, more than likely we could push down to about 1.45. So that's what I'm watching on the US 10-year Treasury, is this consolidation process happening right here. So with that being said, let's get into the VIX. So looking at the VIX, so if we go to a weekly chart on the VIX, you can see here, we had this big red candle, we had a doji, and we closed under the 16.6. So that close does signal that, hey, we could be looking to come down to that next area of support, which is around 15.9 to 15.65. You can see where we immediately bounce. Now, let me just show you guys on a day chart what it actually looks like. So we are back under our infamous 18.8 level. It looks like, again, we had a major rejection here, which is usually like the sign of an evening star. And we have a very bearish candle here, which could be the sign of the 3 black crows. So you see how we had something similar, evening star, then 3 black crows. So you had a big one. So we could see, again, like a little bit of a doji, which would be Monday, which would probably, say, hey, we pushed up to about 16.69, and then we end around 15.19. And then you can see our third candle, which would be like on a Tuesday, that actually breaks below this 15.65, which would be very bullish, because then we would be making a new low on the VIX, meaning the market is making a new high. But I don't expect that to last very long. So, once that happens, the VIX will probably look to make a reversal to try to just shake some people out. So that's the VIX. So, once this gets down to about here, the upside will be back to the 16.6 up to 17.27 and ultimately try to get back to our 18.8. That's what you should be watching out for on the VIX. So those are our levels there. Now let's go ahead and get into Bitcoin. I know Bitcoin, a lot of people have been watching Bitcoin. As you can see, it is accumulating, it's actually accumulating here. As you can see, it's kind of just trading in this range here between roughly 40K all the way down to 33. So what does that look like on a weekly chart? On a weekly chart, we have these, basically these are two dojis, right? So these are they're indecisive. Now, typically when you get a double doji like that, what you would see is a pretty good rally back up to about 46K. So it's very possible that within the next week or so, we could see Bitcoin rally back up to about 46 to 45K. You just had that news come out about El Salvador adopted Bitcoin as legal tender. That could be enough to push it up. However, there's a lot of sentiment that there could be another leg down for Bitcoin. Now, I just want to put some things into perspective about that next leg down to Bitcoin. When you look at this week, it was a negative 20% drop. And when you look at this, it was negative 25%. So let's just take that average of about negative 22%, right? If that happens for Bitcoin, then roughly that will put the next leg of Bitcoin. And if I just take 22%, it puts us right at 27.9. And as you guys can see, I kept, I have a level at 28,760. That's ultimately where I do think that Bitcoin has to come back down to, is about 28.8. And if that happens, then, I do think that could be the signal that, hey, Bitcoin capitulation has happened. And that might be as low as we can go. I know I've been aiming and shouting 20K from the mountaintops, but 20K may not happen, but I'm still sticking to 20K. I still think that we could possibly see a Bitcoin come to 20K. However, if we do get to 28.8, I will be picking up some Bitcoin at those prices, just because, I still think that's a great area to be getting in. And if, it goes lower, I can just buy more at a later date, which is cool with me. But 28.8 is a really good entry for Bitcoin when you think about long-term investing. Okay. So levels to look for on Bitcoin, it has not changed. We need to sustain a close above 38K in order for us to really validate going to 45K. From 45, we could push to 48. If the longer we stay under 38, the more our lower targets come into play. So 28,760 to 28,800. If we break down below that, then again, 20K down to 19K could be in play. So that's what I'm paying attention to for Bitcoin as we continue to move forward. So let's look at ETH. Let's look at Ethereum. Now, Ethereum is given stronger bullish signs. I think with the use case of Ethereum and a lot more people understanding that things can be built on top of Ethereum, it's actually becoming a favorite over Bitcoin now. So when I look at Ethereum, the fact that we are holding above 2541 is a good sign. Now, we could get another push, which I would love to see. If we can really break through this 2961, that validates us to make a push to about 3,300. Now, I do think that Ethereum is going through a bit of a consolidation phase, or getting ready to. And so even if we get to 3,300, I don't think that will hold, and will probably come back down and again do some more up and down within this area as Ethereum is being accumulated. So when I break it down on a daily perspective, what do you want to see? So as you can see, the Bollinger Bands are getting tightened. And as you can see, it's building a nice trading range here, guys. As you can see, it hasn't made it. It's really struggling to get past this 2,800, but it's also forming a nice, strong support here at 2,500. So we could be just seeing Ethereum trade within this range a little bit longer before it decides to make another move up to about 3,300. If it does decide to break down, I will be looking for 2,300 to hold. 2,400, about 2,375. And if that goes any lower than that, then we could be coming back down to 2,000. But the best thing that I want you guys to see is that this 200-day moving average has been catching up. So right now, the floor for Ethereum could be about 1928. So right around 1900, which is really, really good. Because I really want to see that floor for Ethereum come in at 2000, which, signals that, hey, for the long run, Ethereum could be setting up to, go back to that 5K to 10K by the end of the year or looking into 2022. So those are the levels to pay attention to on Ethereum. Again, you guys know that Ethereum has been my favorite. We've been tracking this for a while. So these are some good prices to start accumulating Ethereum if you plan on holding for the long term. So guys, that is our charts for the week. Now for this week's special, what I want to do is I want to share a trading plan that my group, shout out to the runners, that, especially shout out to Dave and Carrie Ann, because they helped put this spreadsheet together. But it's a really simple trading plan. And I want to share it with the people so you guys can see, how achievable your goals are if you just focus on less trades and return on investment. So with that being said, give me a second to pull up the spreadsheet and I'm going to walk you guys through the spreadsheet. All right, guys. So here is this dope spreadsheet that a few group members put together for us to use. So again, shout out to Dave for putting this together for the fam. So if you want access to this, unfortunately, you need to join the Run It Up family. There is a link down in my bio. If you want to join the family, this is something that we put together for us internally. So, but I want to walk you guys through this, right? So this is a very simple trading plan. Now this is kind of just some things that, reminders that we put in for the group so people know, hey, look, don't force a trade. You can use the market to kind of figure out direction. And it's just really some goals that you want to use for yourself. But the main purpose of why I wanted to show y'all this is because, look, if you start with $1,000 and you aim for a profit target of 100%, and you just do 12 trades, right? So I've even put in the trading event because you can, now don't mind these dates, but these are the trading events. And if you focus on 12 trades, and this walks you through how achievable your goals are. So let's just kind of walk in depth of what this strategy is. So your very first trade, right? You'd have $1,000 that you put up for a trade. Let's say you manage to get your 100%, means your profits are $1,000. So your account balance is now 2,000. But here is what's key about portfolio allocation and managing your portfolio the right way. As a trader, you never want to invest all your money into one trade, except for this first trade. You are going to put the first 1,000 into your first trade. Okay. But from there, what you would then do is you want to start allocating cash to a cash position. All right. So what you're going to do is once you complete that first trade, you're going to put 600 to the side and you have 1,400 for your next trade. Okay. Then you go into trade number 2. Now, this is only 2 trades a month. Right. So June, and as you can see, I'm using June quad witching as the event that you could be trading around. Your second trade, you put up 1,400. The aim is to get 100%. You would make 1,400. Right. So now your account balance is up to 3,400. So what you want to do is you want to use the 40% of the 3,400 for your next trade, which gives you 1,960 for your next trade. And then your cash balance is now $840. That's just sitting to the side. Okay. Then you get to your third trade. And again, this is all interchangeable. You don't have to use these dates, but the point is focus on 12 trades. So this could take you 1 year if you did 1 trade a month. Okay. You can really alter this to your liking. But I'm trying to give you guys an idea of strategy. Okay. So your third trade, you would use the 1,960. You get 100%, meaning you make 1,960, bringing your account balance to $5,360. Your total cash position, you would allocate 1,100 to your cash, meaning bringing your cash position up to 2,600 total. And now you have 2,700 for your next trade. Okay. So you can see as you go down, you're breaking your total account balance up into 40% for a trade, and then you're going to keep 60% in cash. So let's just kind of move faster and get through some of these numbers. But as you can see, the compound effect of using this strategy. By the time you get to your 10th trade, you'd have a total account balance of $70,000. You'd have your cash position would be about 41K, and you'd have about 28 to 29,000 to invest into your next trade. At that point in time, you started with 1,000, and by using this simple 60-40% and aiming for 100%, that's what you can get to. Now, of course, I know some people will say, hey, not every trade you're going to get 100%. Absolutely correct. So that's where portfolio management comes in. And the thing is, you want to use 20% stop loss. So if you don't make your target, or if you see the trade is going against you, you need to set a 20% stop loss in place and get out the trade and start over and find you a new trade. That is what's going to save your capital. Okay. So this does kind of, this plan here does, basically say, hey, you're perfect on every trade. And we know not everybody is perfect on every trade. However, if you implement a 20% stop loss, then that will prevent you from losing all of that cash that you have to invest for a trade, as well as you never have to touch your cash balance. Okay, that's going to be the biggest important thing, is that you want to see this cash position growing while your cash to invest is also growing. So as I wanted to point out, by your 12th trade, if you follow this simple plan, at the end, you would be sitting on a total account balance of 140,000, meaning your total ROI would be 14,000%. You started with 1,000, you focused on getting 100% per trade with a 20% stop loss. And at the same time, you're allocating 60% to a cash position, and you're only reinvesting 40% per trade. And so, as you can see, this is the total breakdown. And as you do more trades, the account just grows and grows and grows. Okay. So I know a lot of people were looking for like some specificity over, strategies on, hey, how can I systematically, get my cash back or grow my account? This is a great plan strategy that you can use and implement to where you don't have to day trade every day. You can really focus on one trade a month, focus on getting 100% in compounding your account. So meaning literally 10 trades, that's just 10 trades. So if you count from June and you give yourself 10 months and you start with $1,000, you could be sitting on 70,000 within 10 months, one trade a month. So that'd be June. So that's July, August, September, October, November, December, January, February, March, April. By next April, you could be, if you start with $1,000, you could be sitting on 70K. And again, if you have more money and you're more of a risk taker, I can change this and you can see how that affects. If you got 2,000 to start with and you follow the same plan, then hey, by next April, you could be sitting on 141,000. Say you got 5,000, just to play around with these numbers. If you got 5,000 that you can do this with, you're getting up to 354,000 by your 10th trade. So this is just an example to show you guys of what is possible. So again, if you want access or if you want to learn more about this, again, I would highly advise you guys to join the Run It Up family. These are the type of things that we go through on our bi-monthly calls. In our strategic group coaching, is to find ways to systematically compound and grow your money. We don't advocate on a bunch of over trading and things like that. We are strategic traders, and we want you guys to focus your capital and focus your trading. Less is more. You don't need to be an active hedge funds manager and have a bunch of positions. No, you need to focus on one position at a time, get your ROI, get out, and go back to the drawing board and find another trade where you can get 100% and systematically grow your money. If you have your cash in a bunch of positions and the market goes down, you're toast. But if you're always sitting on cash, you always have an opportunity to take advantage of things that come your way. Okay. So I just wanted to show that and show you guys kind of something that we are cooking up in the Run It Up family. Hopefully this was helpful. And with that being said, guys, we're gonna go ahead and close out this video. All right, family. So that was Setup Sunday. As you can see, the things that we need to be paying attention to: June 10th, the CPI numbers. That's gonna be real big. The week after that is June 15th and the 16th. We got the FOMC meeting, the Fed. So those are going to be two events that, you know, can really set the direction for the market for the rest of the summer. So those are going to be some really, really big events that we have to pay attention to. We covered the levels for the week, so hopefully that gives you guys some guidance of what to look for, as well as I hope you guys like the strategy discussion. I know a few people have been asking more about, okay, how can I put together you know, more of a strategy? So I wanted to cover that in this video to give you guys a sense of, you know, how achievable it is to reach your goals. So again, with that being said, guys, if you like this video, please press that like button so we can get this to other first generation wealth builders like ourselves. And don't forget to subscribe to the channel. And you guys already know, stay blessed and peace out.
Run it up, run it up, run it up. We out for generational wealth. Who else but us? Run it up, run it up, run it up. This is first gen wealth building. Who else but us?